Welcome to Illuminati Silver. We tell the truth about silver. Today is Monday, the 1st of May 2023, and early this morning it was announced that JP Morgan Chase Co. has acquired First Republic Bank. What are the details? We'll take a brief look, and I'll state why I think it's important that we make note of these acquisitions, because to some extent it may undermine all of the fear-mongering that we see on YouTube. Yes, indeed, we were all notified early this morning that JP Morgan Chase has now acquired First Republic Bank. We'll take a quick look at the Bloomberg headline, and then I'll discuss it just a little bit further beyond that. Before we look at that headline, just very quickly, a reminder that we have a sister channel entitled Finances Do Matter, and we provide a link to that in the description box below. And we would also appreciate it if you would give this video a thumbs up and subscribe and press the bell sign. Headline: JP Morgan to acquire failed regional bank First Republic. JP Morgan Chase & Co. won the bidding to acquire First Republic Bank in an emergency government-led intervention after private rescue efforts failed to fill a hole on the troubled lender's balance sheet and customers yanked their deposits. JP Morgan will take over First Republic's assets, including about $173 billion worth of loans and $30 billion worth of securities, as well as $92 billion in deposits. JP Morgan and the Federal Deposit Insurance Corp., which orchestrated the sale, agreed to share the burden of losses as well as any recoveries on the firm's single-family and commercial loans, the agency said early Monday in a statement. Now, JP Morgan's Chief Executive Officer Jamie Dimon said in a statement, quote, "Our government invited us and others to step up, and we did. Our financial strength, capabilities and business model allowed us to develop a bid to execute the transaction in a way to minimize costs to the Deposit Insurance Fund. Shares of First Republic tumbled more than 33% by 4:06 a.m. in New York during pre-market trading, putting it on track, and look at this, to extend this year's 97% slump. JP Morgan stock rose 3.8%. Now, I think it's first worth mentioning that 11 US banks had tried to keep First Republic afloat by between them pledging $30 billion of fresh deposits on March 16th, literally just 2 weeks ago. And you had the likes of JP Morgan, Bank of America Corp, Citigroup and Wells Fargo putting in $5 billion each. Now, Goldman Sachs and Morgan Stanley and other banks offered smaller amounts as part of a plan really devised along with US regulators. On top of that, First Republic tapped the Federal Home Loan Bank and a Federal Reserve liquidity line. But despite all of these efforts, it wasn't enough. The stock price, which actually had reached $170 in March 2022, just over a year ago, sank below $5 by late April. It was also concerning that First Republic's demise wouldn't only just affect common shareholders, but also about $3.6 billion of preferred shares and $800 million of unsecured notes. Now, over the years, the bank had been acquired by a number of other financial institutions, with Merrill Lynch paying $1.8 billion for it in 2007. Then ownership passed to Bank of America, which it bought from Merrill Lynch in 2009. And then it changed hands again in 2010 when investment firms including General Atlantic and Colony Capital purchased First Republic for $1.86 billion, and then they took it public. So it's had a little bit of a checkered history, quite frankly. Now, on the back of this acquisition, we have seen JP Morgan's stock price rise by 3.8%. And it makes JP Morgan, which is already the nation's largest bank, even more substantial in size. And a number of government officials really don't want to see this, but frankly have little choice. because JP Morgan is one of the few financial institutions that can afford what they claim is going to cost them at least $2 billion in related restructuring costs over the next 18 months. And also JP Morgan has vowed that the $30 billion that these various institutions have invested to support First Republic will be ultimately repaid. Now, the $173 billion in loans and $30 billion in securities included in the deal, JP Morgan and the FDIC entered into a loss-sharing agreement to cover single-family residential mortgage loans and commercial loans, as well as $50 billion worth of 5-year fixed-rate term financing. So you've got the FDIC and JP Morgan sharing both the losses and potential recoveries on the loans, which should maximize recoveries on the assets by keeping them in the private sector. The FDIC has estimated that the cost to the Deposit Insurance Fund will be about $13 billion. Now, why is all this important? We hear, and quite rightly so, major criticisms of the banking sector. There is a lot that central banks and national banks and regional banks have done to deserve that criticism. But at the end of the day, whether we like it or not, we're all dependent on these banking institutions for our finance, for our purchases and acquisitions of assets, and for our everyday lives in terms of money transmission services. Without these institutions, and I've just forgotten also for the growth in our various pension funds and investment funds. And whilst it's very easy to criticize their very existence, because of course they're making money on the back of all of us, just imagine if you had put $50,000 into an organization that offered you a reasonable return, which then in itself, for whatever reason, whether through incompetence, negligence, malfeasance, or even just through unlucky investments, that institution goes bust and there is no support. You lose your entire money. Whereas in a number of schemes, whether it be in the United States, the United Kingdom, or the Western world in general, including Europe, there are guarantees up to a certain amount of money, and each country will vary. This would not exist if it were not for the fact that we have an advanced financial system. Also, with banks like First Republic basically collapsing, it could very easily provide a run on the banks if their relationships were not so intertwined. In other words, almost any bank of a certain size is too big to fail. Yes, it can fail in terms of shareholder value, as shareholders of First Republic have just found out, but in terms of the depositors and the mortgage borrowers and the loan borrowers are concerned, they are, to a large extent, not exclusively and entirely, but to a large extent, protected. And without the complex financial arrangements that we have in place today, this may not happen. So before we all go out and start condemning and criticizing, with some justification, they deserve it, but condemning outright our financial institutions, we'd better make sure that whatever we ultimately replace them with will give us at least the satisfaction and comfort of knowing that if we place money into them or if we borrow from them, those investments are relatively safe. That's it for now. Please do give this video a thumbs up, subscribe and press the bell sign. Wednesday, watch out. Federal Reserve FOMC will be making an announcement on interest rates, so we can expect some interesting movements in our markets during the course of this week.